So, hi everybody, I'm Jongsub, Professor of Finance at SNU Business School. I'm moderating this last session of the day. So we are going to talk about how central banks and commercial banks approach stablecoins and CBDC. A lot of discussions have already been done on the stablecoins. But as we all know, stablecoins have become the, one of the central payment mediums in the blockchain-based digital finance ecosystem. Since the collapse of the algorithmic stablecoin like Terra, the industry has shifted its focus, toward more stable, single fiat, packed stablecoins like USDT and then USD coin. But these stablecoins are collateralized with the assets in the traditional banking industry, and also, their values are directly tied down, to the fiat currencies. So as a result, these intermediary-driven stablecoins bear a strong resemblance, to the central bank digital currencies that many central banks are considering adopting or issuing in the future. So today, we are very fortunate to have these three experts in the field as part of our panel to discuss about these important issues. So please introduce yourselves, and then I will ask a couple of questions to begin our discussion. So Hakan, you can start first.
Hello. Yeah, thank you very much for having me here in this last but not least panel of today. So my name is Hakan Eroglu. I'm an advisor in technology and innovation at the Bank for International Settlements. My background is also computer science, and most of other panelists here today. And then I worked in the payments industry, in consulting, including Infosys, Accenture. And then before joining the Bank for International Settlements, I was with MasterCard working on innovative payment solutions, like in the field of open banking, open finance. Today at the BIS Innovation Hub, I'm working on new payment solutions, cross-border payment solutions using wholesale CBDC. Just an interest for you to tell you what, for those who don't know, the Bank for International Settlements. So we are an international organization headquartered in Switzerland, in Basel. So we can be called kind of as the central bank for central banks. One of the new kind of developments within the BIS is the Innovation Hub. So the Innovation Hub was founded 2019 to help central banks, the central bank community, to use novel technologies to then strengthen the monetary system and the financial system as a whole, using blockchain technology, AI, open finance, and CBDC, for example. But yeah, very looking forward to have a discussion today on the developments of CBDC.
Hi, my name is Kaweewut, Tong. So I'm now currently working at SCBX, one of the largest bank in Thailand. I'm now currently head the R&D and Innovation Lab department. Basically, what we're doing is try to adapt the technologies to serve our clients. And been here around Korea, working closely with Hash and Shard Lab on a number of blockchain initiatives, and very good to be here.
Hello, I am Anna from Standard Chartered Korea. I'm the conservative generation. I working at bank more than 30 years. So first time when I see the coin is concept, 2013, we identified Bitcoin. At the time, we had a lot of study. What is Bitcoin? How risk on the money laundering? How it make mess in our industry. But suddenly 10 years later, it's totally different world we are in. So at this time, I had a lot of the careers in this new world, and thinking about what kind of the role and responsibility will be taken by the traditional legacy bank and industry. I'm really happy to join this session. Thank you.
Yeah, I prepared a couple of questions to deeply discuss on the stablecoins and CBDC. So as a beginning, I want to start with this question. So what are the differences between CBDC and stablecoins? And how should they coexist in the market? Are they substitutes or complements? And how should we view, their coexistence in the market?
Yeah, so if I may start. So,
Please, yeah.
so in our innovation hub, we have different projects, using CBDC, tokenized deposits, for example. You mentioned stablecoins, but stablecoins is more like an area where the private sector is building solutions, including tokenized deposits, which is the tokenized form of deposits that is anyways private money, right, but just tokenized. From a CBDC perspective, so that's central bank digital currency, which is the tokenized form of central bank money in the end, right? So the M0 money, that is the safest form of money, is tokenized, and the idea is to use CBDC to be integrated into the new space of novel, we call it unified ledgers, like as an overarching term for new type of solutions that require ledgers where tokenized assets come together, tokenized monies, and then running on one ledger or multiple ledgers, how they interoperate with each other. And certainly there are also different forms of monies in place, like stablecoins, that play a role in the ecosystem. And there are different forms of that. For example, the way how they are backed could be like securities or any other assets. It could be also CBDC, so where, for example, the stablecoin is fully backed by CBDC. That's another form of a stablecoin. But the space where we are specifically concentrating on in the Innovation Hub is how CBDCs can be used to bring value to the current kind of monetary system as well as the payment system. So there's one project called mBridge that is our flagship project in the Hong Kong center. So we have multiple innovation centers globally, 7 in total, and one of that is in Hong Kong. So mBridge is a wholesale CBDC payment platform running on an EVM-compatible blockchain, permissioned, like private permission. So just central banks have access who are part of the platform. At the moment, we have 5 jurisdictions, which with Hong Kong and then mainland China. We have also Thailand and UAE, and just recently joined Saudi Arabia with the respective central banks that run their own CBDC on the platform and do PVP instant payment between the jurisdictions using wholesale CBDC. So it's novel technology applied on existing, problems. So how can I make cross-border payments accessible, cheaper, faster for everyone? So that's our contribution of solving problems with novel technology using tokenized central bank money.
All right, so let's add more color from the commercial banker's point of view.
All right. So so that's a CBDC, right? And another thing is stablecoin. So stablecoin can be backed by fiat, backed by crypto, or backed by algorithm, right? Like what we knew. I want to introduce another concept that just we are talking about tokenized deposits. Tokenized deposits is the blockchain-based form of the currencies that issued by the commercial bank. It's been introduced because of the stablecoin before, right? There's no regulatory framework to govern it, so you have to check yourself whether what they promise to be fully backed by each type of fiat is true or not. So those are like a stablecoin that you have to go look at check their balance, here and there. But the tokenized deposits basically backed by your own deposits, and it can be used in a number of use cases. It has characters on programmabilities, the atomic, near the swap, and also it's currently under the current regulation. Basically, the bank that want to issue this has to be perform it under the regulation, the reserve, and everything. So those are the concepts that's now being mostly by many commercial banks right now, that bring kind of the good of both worlds, where you have regulations where people can be peace of mind, where the money is there, but at the same time they get the features where programmabilities and all those near-term settlement is there. So those are another type of stablecoins that we're currently working on.
Anna, maybe you can add your own opinion.
Actually, I has no idea at this moment, but might be 10 years, 5 years later, we don't know what happened. But SB group level is Hong Kong, SB Hong Kong already involved in Hong Kong MA for the stable coin structure, but it's the early stage, so we don't know what happened. Might be so Hong Kong, might be China, might be decide Hong Kong you only use the CBDC. Might be, we don't know that. So, and might be in Korea, in Korea still is behind than the other country, but I read the paper, the government has some plan, might be the baby coupon, only using the CBDC. Might be, it's one of the sample to the customizing for our whole industry. But in the legacy bank perspective, we need we always thinking about the client protection. If we invest any money for the higher risk product, at the time we should make the control measure for the client customer protection. So the reason is I was said conservative client. So I'm not sure that at this moment might be in my case, which one is the best to the product for the CBDC stablecoin related products? Might be our sector back to buy traditional bank asset. It's more stable than other than, but might be it is the first stage for the commercial bank. But might be 30 years later, we has no chance to see the physical currency, and might be I said my grandchildren, the coin, the paper note. They say, what is that? Might be we can imagine that. Yeah.
So we, based on your opinions, I think we are already talking about what might be the best form of private money, right? Stablecoin, and we also talk about the tokenized deposits. The latter seems to be more regulation, conforming to the regulation, right? So, is there any other view, maybe Hakan, you might have? What might be which form has the maximum potential, to be used as the means of this payment eventually?
So as I said, I'm from the Innovation Hub, so we explore different, how different forms of money can benefit the economy for certain use cases. You need different forms of money for different use cases, right?
So maybe we can open the discussion to the maybe use cases.
Yeah,
right? Very natural.
Enbridge, as I mentioned, is wholesale CBDC. It's for the big pipes for trade, global trade, right? To make big payments between companies, for example, which is today being used through correspondent banking. It can be done now directly between the countries, between the central banks, and then connecting the commercial bank. So commercial bank A sends money to commercial bank B through the platform instantly using wholesale CBDC. So that's the one use case, for example. Then continuing on the CBDC, there's retail CBDC. But there's, we have counted around, I think 130 countries, jurisdictions are exploring CBDC, like retail CBDC, wholesale CBDC, then in different stages, pilots and POCs and so on and so forth. So, but the outcome of that was that specifically most jurisdictions that are looking after retail CBDC are those who have kind of a lack of existing payment rails for individuals, like a faster payment system doesn't exist, or a card scheme doesn't exist, a national one. So in order to leapfrog retail CBDC can be used, right? But then there's digital euro as well. So there are different initiatives in that side to facilitate the need of individuals. Then tokenized deposits at the moment is being explored on specifically on the wholesale side. So we see like there is one project, a fairly new one, also from the BS Innovation Hub called Agora, which is a project that is between 7 jurisdictions, including Korea. So the Bank of Korea is also in this project. So in that one, these jurisdictions want to explore how the correspondent banking network, the existing one, can be improved through tokenization. So what can be changed through tokenization to improve the correspondent banking network using tokenized deposits? But the answer is not there yet because it's an innovation project. We are exploring it under the roof of the BIS in a safe and secure environment between jurisdictions to see, okay, what is possible, what's not possible, what can we improve, right? And we are also actually seeking insights from academia as well, like from professors, from universities as well, because these are, issues that we see right now today that cannot be solved probably with existing software solutions that are on the market, but it needs to be actually explored and invented really to improve the system. So as you see, there are, these different monies serve different purposes, different use cases. So in sum, I cannot answer the question which one will win or so. I think there will be different forms of money that have its place in this whole ecosystem. Yeah.
And I think that it will be beneficial for us to hear more about the use cases in the other region. Like, what's the development in Thailand?
Yeah, so as a commercial bank, we try to serve our customers by lowering the cost, right? So either the bank cost or the customer's cost. For example, most of the bank actually run the payroll system for the companies, right? So just imagine where I'm not sure if you're thinking about like why do we get a money salary? We call it monthly salary, right? But why monthly? Why not weekly? Why not daily? Because of the administrative costs associated with that payroll system is quite high. So if we start to implement this kind of digital, the distributed ledger system, you can think about paying your employees by day or by hour or by seconds, because that's the kind of the nature of the programmabilities of the blockchain-based money. So that's one thing, right? So you can get the features that's beneficial for your client. That's one thing. Another thing is lowering the cost of credit for your customers. For example, in Thailand, there are a number of SMEs who not get the loans, or even to get the loans from the bank is quite expensive, right? But if you have the features of these programmabilities where you can ring fence the usage of the loan, right? So as a bank, we are happy that you're not, using the loans for other purpose, except, invest in your plans or, invest in the productivities. So that way, if you can ensure that with the technology, so you can bring the interest down. And that's a win-win situation. So we're actually tightly focusing on the use case where it can lowering the cost and beneficial to customers and by linking the technology. So these are some of the use cases where it's not like a retail payment kind of thing, but it's something that we run. It's the main business for us, and if the technology works, that's a big benefit for the bank and also for the client as well.
In the commercial banker side, thinking about we have some image, all Swift message change the CDBC some chain, and all Korean currency clearing system change, something CBDC or stable coin. How many costs can we save? Thinking about there's huge clearing house, they get a huge money, but in the future everything is a coin-based process, and done by simply the real-time based clearing and payment will be done. The total change our traditional banking industry and all FI industry get a huge impact. It might be in the future might be no need credit card, no need PG, payment gate, no need any intermediary payment system. So, what kind of the effort will be survive? Might be 10 years later, might be retail banking whole totally change, only some internet bank cover that. How about our traditional big bank, CT, HBC like that? What kind of our role? Might be we make the bank for the only entity or FI. So I'm so nervous. 10 years later, might be my job will be disappear. Thinking about it now is how much money will input for the regulatory compliance cost, KYC, money laundering transaction monitoring, and might be you get some information. TD Bank in Canadian bank, they get the 26 billion, might be 2.3 billion money that they should impose as the penalty. But in the future, the CBDCs can, okay, we know which person get this coin. We don't need more transaction monitoring. We don't need any more regulatory compliance process. This is our future, but I'm not sure what kind of the infrastructure should we consider by this industry. But the one thing is important thing will be changed quickly.
So I think maybe it's kind of good time, maybe, because we still have some 2 minutes. So I think we haven't talked about the programmable money or smart contracts, the power of it when it's combined with the blockchain infrastructure. So regarding that, what might be the benefits in this coexisting CBDC and stablecoin infrastructure that could bring in, to the banking industry as a innovation or as a way to make them, survive and then, grow together. So I think maybe the Hakan, you may know any, cases that, central bank and then commercial banks, they collaborate and try to create some innovative, actions using, smart contracts and blockchain technology.
Yeah, I think in Korea it's the case, right, with CBDC and then the private sector building applications on top and certain, like the vouchers or so, right? So there are examples where like central banks collaborate, with commercial banks in terms of providing the base, the foundation, the infrastructure, and then letting the commercial banks, the industry to develop smart contracts on top of it for certain use cases they want to offer. But then one other topic to be considered is privacy. So privacy is the main concern when it comes to specifically on retail CBDC, for example. And then on top of that, the programmability, right? So for example, the digital euro, the ECB says, and the idea is to make it completely private and that the data is not tracked and that nobody knows who spent the money and so on and so forth. So privacy and privacy enhancing technologies are quite important these days to enable fast payments, but at the same time to ensure privacy of the data. So that's something to be considered. And programmability is something that really depends on the country and on the preferences, on culture, because people probably don't want programmability because you can track and there's some form of control too. On the other side, you have also use cases that you can build on top, right? But it depends on the architecture, how you build it, right? As long as the central bank, the authorities, they don't see the transactions, which is the ambition of most of this CBDC project is to retain privacy. But then on top of that, there's a layer for the private sector to create the smart contracts and the use cases where there is some form of traceability because there is a use case on top. But they can see it, consumer can see it, and the commercial bank can see it. But then the actual core infrastructure doesn't track that, for example. So it really depends on how you design it. But we have seen different examples so far in the market. I mean, nothing really to emphasize, but again, Korea is running such a use case as well. Yeah.
It's just the one last question to the commercial bankers, because it looks like the CBDC is quite convenient, but it actually makes some problem in terms of privacy once the government can oversee every transactions that individuals do. So from your commercial banker's point of view, in a stable coin or any private sectors, the activities that can actually complement or help avoid this issue, or would there be any ideas?
Yeah, I think definitely. So, but I think it really depends on the context, on the policy of the countries, right? Because yeah, there will be some countries who care about privacy, there's some care about productivity. So it's quite. I think that's like a country's policy. Like for example, in Thailand, we are working closely with the central bank on how we can develop the things that Hakan said, and it's very important, is the interoperability, because you cannot start from day one, design everything and force everyone to do the same thing, right? At the end of the day, there will be a number of infrastructures, but the technologies that need to be defined to interoperate between each blockchain technology, that is very, very important. So those are the areas where I think the central bank and the commercial bank been talk, and mostly the CBDC right now, there are many countries been working on. 90% of the countries said they had been doing a POC and all those, but I haven't seen much on the linkage right now with the CBDC and the commercial bank, because right now mostly CBDC initiative been initiated from the central bank. They initiate the technologies, but it's not yet going to the market yet. It's in the POC phase, and now it's basically a commercial bank working together with them to provide an input. And also, bringing a small group of customers to test it out, but it is yet to be seen on how this play out in the mass adoption. Yeah.
We already talked about how should they collaborate. So I think Anna, maybe as a final takeaway and giving some final wrap-up message. Actually, each one of you, right? So, how central banks and commercial banks approach stablecoins and CBDC?
Okay, I just focus on the little bit narrow scope in Korea. Thinking about our regulatory environment. Is it possible the stablecoin CBDC stays at same physical place? I'm not sure that. In Korea, I keep saying the conservative. Yeah, at this, still until now, our regulator concept is so clear. Coin, any type of coin, is too high a risk. It doesn't matter how many percent client really involved in the money laundering, economic sanctions. It doesn't matter. Their concept still is that they focus on the legacy, traditional banking FI industry. So my personal view, for the time being, it is not exists at the same time. Might be our central bank more focused on the CBDC, and then might be we look around the other country, and then some country has some successful story. At that time, Korea is possible to starting those businesses. This is my view. Yeah.
Tong, you can also wrap up by just adding one statement, and then Hakan, you can.
Okay. I will start. Yeah. I'm the yeah.
Okay.
Yeah. I'm so legacy person. I don't like the Bitcoin higher risk product, but my son generation ask, "Mommy, why you input your money in the term deposit like ELS like that?" I cannot answer that. So this is a real situation. This is we thinking about what is the traditional FI law, and in the future fintech-based industry role. So I keep watching what happens in the future. Thank you.
So one last thing I think is I'm also working in the innovation function in the big corporates. I think the commercial bank and also the entities in the financial industry need to keep innovating and working closely with the regulators and keep them informed and you know, at the end of the day, you just need to communicate and get the stakeholders to be on board in order to execute. So, but the future is there. So yeah.
Yeah, I mean, I can just echo this in terms of, you know, collaboration. So that's the nature of what we do in the BIS. It's collaborating with different, you know, all the central banks, as well as with other international organizations, and also with the private sector, right? So in the end, the use cases are created and run by the private sector. It's not the central banks doing this. But however, the backbone needs to be modernized and made fit for the future in the world of digital, you know, currencies and tokenization of assets. There needs to be also representation of the current world in the future world, which we want to provide to have the kind of a backbone financial system to facilitate the future. Yeah.
So I think let's wrap up, and then looks like the message is strong. The message seems to be the commercial sector, commercial banks, central banks, they need to collaborate very closely, try to do many trials, errors, and then, you know, let the regulators learn about what they do, so that we can, you know, continue to innovate, so that maybe we will know what's going to happen, you know, through these innovation attempts, right? So let me close our session, you know, now, then give a big, you know, hands to these, you know, panelists, and thanks for the audience.
Thank you so much for sharing your insight. Ladies and gentlemen, as we wrap up today's incredible series of discussions and insights,